We really are in the sweet spot. I mean, this is kind of be the next 10 years is going to be kind of the Bitcoin gold rush. I mean, we're going to have $1 million a coin in 10 years, and
Mm.
that's going to be meaningful. But we could have $1 million a coin a lot sooner than 10 years also if we hit that tipping point, in my view. I think you buy it and you hang on to it, and knowing that, given enough time and letting time and adoption do its thing, it will be much higher in
Mm.
5 years and 10 years and 15 years.
Lawrence Lepard is the founder and managing partner of Equity Management Associates, an investment management firm focused on monetary debasement insurance. In this video, he explains to everyone why Bitcoin is set to dominate global finance and revolutionize monetary systems all over the world in just a few years. He predicts that within these 10 years, Bitcoin could skyrocket to higher and higher levels, reaching insane prices due to massive adoption. He even believes that Bitcoin can hit $10 million a coin in 10 years. Do you think this is too bullish or not bullish enough? Let us know in the comments. We will now bring you clips of Lawrence Lepard as he discusses Bitcoin's rapid adoption that will soon send its price to the moon. Give this video a like and subscribe to the channel to show your support. Make sure to stick around until the end of this video to view a chart that proves Lawrence Lepard's points. Thanks and enjoy.
The adoption could happen even more quickly than we think. I mean, we just don't know. To me, it's pretty obvious where we're going, and we live in a very digitally connected world, and word travels quickly, and information travels quickly. To me, it's pretty obvious where we're going, and how we get there is a little less clear. I mean, it depends on how much the Fed prints and how quickly and how steeply this occurs. I mean, one thing that is a little different, I've talked about this in other podcasts, is we live in a very digitally connected world, and word travels quickly, and information travels quickly. And I mean, look at us talking continents apart and video streaming one another. I mean, you couldn't do this even 5 years ago. So the adoption could happen even more quickly than we think. I mean, we just don't know. I mean, the example I've cited is that and it was very interesting, when you kind of get a phase change in how people understand things. The example I said is Silicon Valley Bank. So I actually, they were my bank. I used them. And, one day in March of 2022, or maybe it was 2023, I'm sorry, it was 2023. And one day they were fine, and then they had to sell some bonds. They sold them at a big discount, and some accountant did the math on that sale and said, oh, if I do this and apply it to their entire portfolio, this bank has a negative net worth.
Mm.
And that means it's in trouble of going out of business, and the FDIC only insures 250,000. Well, he told a venture capitalist in Silicon Valley about that, and that guy, they played the telephone game. That guy sent out an email, blasted out an email to all his portfolio companies, all his friends, and Silicon Valley Bank had about $100 billion in deposits. In one day, $48 billion of deposits were withdrawn from Silicon Valley Bank. One day.
Mm.
So this was a digital bank run, and I mean, we're talking about. I mean, this was a week from the time when they sold the bonds and somebody realized that they had trouble to the time when they said we're bankrupt and the FDIC has to take us over was 1 week long. So and what changed in that week? Well, the knowledge that they were bankrupt became manifestly evident to everybody in that 1 week, and that's what created the change. Well, I mean, how hard is it to extrapolate to something similar with the U.S. federal government? I mean, they have a failed bond auction. The yield, the repo rate blows out like it did in 2019. Interest rates shoot up very high in an uncontrollable fashion. The Fed steps in and says, we're going to buy these bonds. And in order to do so, we're going to print, I don't know, 5 trillion, 8 trillion, 10 trillion. I mean, doesn't that send everybody thinking to themselves, holy shit, there's no limit to how much they can print. And having studied hyperinflations and the history of hyperinflations, I mean, hyperinflations and high inflations, and I don't like the word hyperinflation because it implies like a doomster mentality, and I'm not a doomster, but these things do occur. I mean, and it is, you have to consider it's one of the tail possible outcomes. And they tend to occur when everyone comes to the conclusion that, what, I can't trust this government. They are never going to stop printing. Get me out of here. And that's what we all, in Austrian terms, define as Gresham's law, which says when your money is losing value very, very rapidly, you exchange it for money that's not losing value. And it's funny because Americans are very unfamiliar with this and haven't really thought about it. We've had a generally stable currency, since World War II. We won that war and a lot of things. And we haven't had hyperinflation since, we were founded in '89 when the Continental hyperinflated. And so the bottom line is, Americans aren't very attuned into this, but people who live in Argentina or, people from the Eastern Bloc countries or people from Venezuela or Zimbabwe, I mean, other people from other countries actually get it a little more than the average American gets it, that, it's possible for your government to be so irresponsible that your currency becomes worthless. I'm not suggesting that will happen, but I am suggesting it's one of the possible outcomes. 40 years, everything's going to be denominated in sats, because what we've got here is a form of money that's superior to government money. And if you look at history, the best technology always wins. I mean, as Safe says, when gunpowder got invented, people kind of stopped using spears and axes. They started firing bullets, and so, this is a form of money that can't be printed. It's sounder than anything a government can create, and it's super easy to transfer and move around, and therefore I think it's destined to become the base layer of money. Now, is it today? No, of course not.
A quick news intermission before we proceed with more clips of Lawrence Lepard. Recently, at the MicroStrategy World Conference, Michael Saylor also introduced a new system called the MicroStrategy Orange Decentralized Identity Protocol. This system aims to make digital identities more secure by linking them to the Bitcoin blockchain. Alongside the announcement, a draft of the protocol's specifications was made available on GitHub. Saylor had hinted at his company's interest in identity and authentication previously. The protocol works by issuing identifiers through a cloud service and providing tools for software developers to integrate them into their apps easily. It uses a method similar to ordinals to store data related to decentralized identity securely on the Bitcoin blockchain. This allows for documents to be created and updated without many restrictions while taking advantage of Bitcoin's advanced security features. The system generates unique identifiers that can be used to verify users on social media, authenticate messages, degrees, or medical records. With all of that in mind, this integration with Bitcoin opens up new possibilities for secure digital credentials and authentication methods. What do you think of this news? Let us know in the comments. And with that, let's go back to more insights from Lawrence Lepard.
Bitcoin will become much, much more, ubiquitous and easy to use, so that, my mother can use it. I mean, right now, my mother's not going to do, she's not going to store shit on a Trezor and do on-chain transactions. It's just too complicated. But that functionality will be available to everyone for pennies at some time in the future in a very easy way, in an idiot-proof way. But, it's going to take 5 years, 10 years to fully roll that out. So, but I can just, I can see it clear as day, and I think Lynn and Michael see it as well. And so, my view is, if there are a limited supply of these things, 21 million, it's kind of like you want to own them and, avoid the rush, buy now, because they're going to be more expensive in the future. I mean, I often talk about how much fiat money there is out there. And I talk about, as an example, there are 54 million millionaires in the world. There are 21 million. I mean, every millionaire in the world couldn't even own one Bitcoin. So if you own one Bitcoin and this becomes money, you're kind of almost by definition a billionaire. What I would reference is a book written by Malcolm Gladwell called The Tipping Point. And what it suggests is that a new innovation comes along, and there's a period of time where the innovation is kind of getting ironed out and figured out, and less than 10% of the population is using it. And then when you hit 10%, you kind of hit a tipping point where it's like, oh my goodness, this is real and it's big and it's important and it's a change. And then the curve gets very steep in terms of adoption, and it appears, and the measures are fuzzy, right? We don't know exactly what percentage of people are using Bitcoin, but in my estimation, we're kind of rapidly approaching that 10% point. And there's probably not many people in the developed world who haven't at least heard of Bitcoin. They may not be using it, but they're aware of it. And that's going to grow, and I think, accelerate. What you're looking at here is a chart that has countries listed on the left, and then the population that are using, and they define it as crypto, which, I don't like the term crypto, really like Bitcoin, but you have to assume that within crypto, a lot of it's Bitcoin. And then the right, so that's the blue bar, the number of people who are familiar with crypto in that particular country. And then the right bar is the share of the adult population in percentage terms. So for example, in India, 299 million people have used crypto. and that represents 29% of their population. China is very low. They're at 931 million, 8%. Basically, I think if you look at this and you kind of average it out, I think one could say we're share of adult population in all these countries, it's got to be averaging 10%, right? When we get to the 10%, the acceleration takes place. Certainly not everyone owns crypto. In fact, less than 10% of the population owns crypto, but it's the awareness is there. We really are in the sweet spot. I mean, this is kind of the next 10 years is going to be kind of the Bitcoin gold rush, from 2024 to 2034. The entire world is going to come to embrace this thing, and I think he's right.
Meanwhile, Hong Kong recently introduced 6 spot Bitcoin and Ether exchange-traded funds, becoming the first in Asia to enable retail investors to trade cryptocurrencies at spot prices. These ETFs, issued by 3 Chinese firms and endorsed by Hong Kong Securities and Futures Commission 2 weeks ago, initially experienced price surges, but later displayed fluctuations throughout the day. This development is viewed positively for Hong Kong's financial markets, positioning the city ahead of counterparts like Singapore and Dubai as a regulated hub for digital assets. Despite uncertainties surrounding the regional demand for these products and expectations of gradual growth, industry executives maintain optimism regarding the long-term prospects of crypto assets in Hong Kong. What are your thoughts on this development? Share your views in the comments section below. In your opinion, what are the most significant barriers to Bitcoin's widespread adoption, and how might these be overcome in the coming years? Share your thoughts and join the discussion in the comment section below. If you found some value in today's video, we would appreciate it if you hit that like and subscribe button. Lastly, if you would like to be updated with all of our future updates, please tick that notification bell. Your support encourages us to create more content on the latest relevant news in crypto. Thank you for watching. We hope to see you in our next video.